So this is an example of a liquidity here. This is like an engineered liquidity. Liquidity was built from this trend line. You can see how price constructed this liquidity around here, and we have a retracement. Price retraced to this level. So this is where we have the old low that created the highest point of this market here in the 1 minute time frame. So price broke lower here, causing a shift in market structure, and we have price retrace taking out this engineered liquidity. What do you want to see? You want to see price continue dropping down to your first level of liquidity, which is this old low. Second one is this other one here, this other low. Then your third level of liquidity is this where I have this other relative equal lows. So that would be like the overall take profit on this market. So let's see how it goes. Just want to use it to explain types of liquidity. So this is what it looks like on the 5 minutes here in the downtrend market. This is like a downtrend market. You want to like continue. When we look at this from here, you see that this is like an AVG price retracing to. This is the AVG talking about here. The price retracing to before dropping down. Guys, welcome back to my channel, and today I just want to show you how I took this trade as usual. But in today's video is going to be a little bit special, quite different from every other video, because I'll be saying some things which might be benefiting to you if you really understand me. So this is GBP/JPY, and for some time now you notice I've been doing this counter trading series on my channel on USD/JPY pair, and for some reason I understand a directional bias of JPY pairs to be bearish for some reason, because I've been following USD/JPY, and if you're a trader, you know that if you're following a particular kind of currency, I think that's what we call the base quote. Okay, the base and the quote. So the quote currency, I've been following JPY quote currency for some time now. The quote currency in the sense that JPY is the 3 last currency, right? That's the quote currency. So since I've been following it back to back, I have too many ideas on what is supposed to play out in a given currency. So I'm not here to talk about USD/JPY, but permit me to go back to USD/JPY, where I did some videos on counter trading. Permit me to go back there. Now in USD/JPY, everybody that have seen the video know that I've been expecting a bearish price action for a while now. And if you look at on the 1 hour, this video is not about USD/JPY. On the 1 hour, we have this market structure shift here after price must have taken out liquidity, giving us a good model. So if I've got a market structure shift on the 1 hour, and on the 4 hours I have this to be a break of structure, so I counter traded here and I counter traded here also. And for some reason price did not get my first take profit. On that video I mentioned this level to be my first take profit. Then I don't need to say why, because every other thing is in the other side of the video, which is counter trading part 2. Yeah, because this one was the part 1. So with the knowledge that I have from USD/JPY, because I've been trading USD/JPY and NZD/JPY for some days now, I know that all other JPY pairs too, because they are correlating, it will be bearish. So I know that all other JPYs pair will be bearish, but is how am I going to take advantage of this? Because in USD/JPY I was already counter trading because I saw a good opportunity on the 5 minute. Now I saw a good opportunity, you have this everything, but on the higher time frame, if you look at the 4 hour time frame, I don't really have a good opportunity here on the higher time frame aside this fair value gap here, although it's not really looking so nice. Yeah, this is a fair value gap, we know, but I just want to counter trade this market. This is a fair value gap, so I was looking at it here. For me, it was not a good opportunity for a sell. Like, I don't know why I refuse to pick this particular pair for selling. Maybe because I've already analyzed GBP/JPY, and that was why I refused to sell USD/JPY. So when I said correlating pair, if USD/JPY is bullish, we tend to make, just like you know very well that USD pairs like GBP/USD, Euro/USD, NZD/USD, which other USD pairs, so many other USD pairs. If they are actually trading up, you want to see all other pairs trading in that direction based on it's trading against dollar. So if dollar is strong, you want to see the pair trading higher. If I'm correct, you just know what I'm saying. Just get the gist is that a correlating pair is just, you have to, when you use other currencies to analyze your trading, because at the time you can be trading a particular currency and it's not very visible, your setup are not visible, you can switch to the other correlating pairs in order to see what you want and get it straight. So at times the setup on the other pairs might be very very clear for you. So since I was actually counter trading this one, I could not really cite a very good sell model. And if you check other JPY pairs like Euro JPY, pairs, if you look at this one was not really clear because as at the time I made price did not have a shift in market structure yet. So price was around this range, so there was no shift in market structure. It was around this range. I did not have a shift in market structure, so I was not seeing a good setup here. So I switched on to GBP JPY. When I came to GBP JPY, I saw that price have already created a shift in market structure here on the 4 hour. This is a shift in market structure, so I had to use this one. Then I understood this whole concept of breaker block entry model, where you see price sweep liquidity above the last high, something like this here. Sweep liquidity above the last high, break or create a market structure with an impulsive move, then retrace to that block again. Now, I told you that these pairs are correlating. On USD JPY, we were actually retracing to a particular level of interest. Let's go to USD JPY. USD JPY on 4 hours, we were retracing to a particular level of interest, which is this fair value gap here. This fair value gap, we are retracing to this fair value gap here. But aside retracing to the fair value gap, I wanted to take advantage of the retracement. Why? Because on 5 minutes everything was very visible and it was not a bad idea taking a trade, because even if it was 1:2 point something, it was not fully 1:3, although I like doing 1:3. I saw this whole set of the shifting structure, the sweeping liquidity, everything was just perfect for me, so I took this trade. So I counter traded here. Now I'm counter trading to a particular point of PY, so I expect all other JPY pairs to be actually trading into their point of interest. Because I'm counter trading here, this was the most visible setup for me on a JPY pair. I was expecting all other JPY pairs to actually trade into their point of interest. Since USD JPY had a clearer setup, I had to take advantage by counter trading USD JPY. Then if you go to GBP JPY, you see what I'm talking about. GBP JPY on 5 minutes. On 5 minutes, I could not really counter trade anything from here. This whole place here was not tradable. I think it was this level. What was that level of retracement? Okay, this whole level here, this was like a consolidating market for me, so there was no ideal shift in market structure. I was looking out for opportunities for counter trading, but this whole level here was quite confusing, so there was no shift in market structure here. So actually get to my POI, this was my POI, but in USD JPY I already had a motive of counter trading it because it was quite visible. It was very very visible. Why? GBP JPY was not actually giving what I want, but we know that they are actually correlating pairs. So when GBP JPY trading into my point of interest, I should be getting prepared to leave USD JPY, in the sense that we are actually trading into a particular level of interest. And if all other pairs that have this JPY are getting to their point of interest, then it's now time to leave the market. So that was why my initial my initial take profit on USD JPY was this high. This was an inducement, so my initial take profit was this inducement, but I think price was too heavy enough that it could not sweep the liquidity above this high, so it just stopped here. And when I saw some retracement back, I was just looking at the market, but this pushback again made me leave the market. I left the market around this level here. Around this level here. So that was how I made advantage of this pair. So you can see that some pairs might actually show you some things that you might like. So see how clean this setup was there, but on JPY, it was very, very complex. So if you understand the concept of correlating pairs, you might know how to take an opportunity when you're looking at Euro USD. You're not seeing a clear setup, just like this Euro USD. Also, I did not really take Euro USD trade as at that time, because look at this, it was not showing me a good setup. Like, yes, it's actually visible. You have the shift in market structure. Although I traded it, yeah, I traded it, but I did not like the setup. The one that gave me the best setup was GBP USD. Although this is not about it, it's more like I'm talking about correlations of pairs, and at the same time talking about the trade I took on GBP JPY. But since this is GBP USD, you can see that this breaker block was perfect. It was perfect here, and I took this trade because it was actually perfect, still on the breaker block entry model. But if you look at Euro USD, I won't say Euro USD wasn't perfect, but it was not giving me that good formation. Look at Euro USD. This was happening here. Although the sweep in liquidity was quite visible, I saw everything, but the formation was very complex. This is the sweep in liquidity. I had my shift in market structure here. And everything looks nice. But when I met market, I saw this whole retracement. It was showing this I will not call it willingness. It was not a willing trade, because if you see, it was giving you the exact momentum of retracement. Let me just explain. Look at this, is the momentum price used to come down. Okay, let me just use something else to draw this thing. If you want to see price go bearish, you want to see something like, you want to have a more momentum to the downside and a less retracement. Let me explain using like a schematic diagram here. Okay, you're having a bearish price, you want to see more momentum to the downside and a less retracement, more momentum to the downside and a less retracement, more momentum to the downside, showing you that these sellers are in charge of the market. There is more momentum pushing to the downside. That is what I would have liked to see. But if you look at here on Euro USD on the 5 minutes, it's more like you were having the exact same momentum. So I did not like this kind of price action, because I was not fully convinced that the bearish market, although everything was actually in place, but it was not giving me that good control, that bearish control of the market. Look at what I'm saying here. Imagine in the market, you're having a market like this, you have the move up. Yeah, this is very correct for the first time, because we have a more momentum to the downside. Then you see we retrace almost exactly 90% of what we pushed down. And okay, secondly, we pushed down a little, but see this one, we retrace above or almost equal to the sell momentum, and yet we are bearish. Then the third time we actually retraced and we pushed up again. Okay, let me just continue from here. We pushed up again. Sorry, that's not the tool I want to use. We pushed up again to this level, then we retraced again, then finally we then pushed up. Now if you should look at this price action, you cannot fully say the sellers or the bearish is actually in control, because for every point in the market here, you see that the retracement is actually going, or is actually almost equal to the trend of the market. What I mean is that this retracement that is going up now is actually equal to the push that is coming down. Since we are bearish, you want to have more bearish momentum, but you can see this retracement, if this is a range of 100%, you can see the retracement did up to 80%, which is not very nice. Then see this one was almost equal to, yeah, I get the point of taking down liquidity and everything, but this market does not fully show you that you're in control, so you'll be skeptical. That is why I did not like this market. But if you go on to GU, when I traded GBP and USD, you see that price played out well to a particular level till we went to take profits. Look at this. Look at price action, guys. Look at how beautiful it was here from this level. You see what I'm talking about here. You can feel the control in the market. This is, you're coming down, a little retracement, you're coming down a little. Okay, this one is not a little retracement. Let's get that. This was where the reaction, the breakup block came in place, and we understand. So another retracement came in, another push came in, and you have a little retracement. You know, it's just like the tug of war stuff. The tug of war, you cannot tell me you're in a tug of war with a particular set of people, and maybe you want to win, and your guys are having equal strength, equal force together. You might not likely win your opponent, because you're having the same force, the same energy. So one person have to be stronger than one. So if you're in a trend, you want to see price action move in that trend to be sure that you're stronger. You cannot tell me that you are in a tug of war or something like this. You are actually pulling somebody, and this person is supposed to pull you. This person is supposed to pull this arrow together to himself, but this is the length of the arrow, and the force you need to get this arrow is this level, this level here. And you cannot tell me you guys are exerting the same force on this arrow and you have a winner. One person have to take a higher force or strength. I don't know if I'm explaining it well, but I'm just trying to tell you that if you're in a bearish trend, you want to see more impulsive move to the downside to show you control, the bearish control. You cannot be having complete retracement. Like, it's more like a consolidating market now, because you're having the same force at the same range. So you cannot fully call this a bearish market, or you cannot really be satisfied with this bearish move. So this was what EU gave me, and I did not like. So I went to GU, and you can see how GU played out very well. So back to our trade. I'm deviating, but I'm actually explaining something. Yeah, maybe most of you did not know this, but now you can understand. If you have a trade, you will just look for the nearest correlating trade if what you're seeing on this particular one is not giving you what you want. So just look for the next pair. Just maybe the next pair might be the right pair. Now, if you have a trade on GBP JPY and the setup is not visible, you can go to pairs like AUD JPY, CAD JPY, any other JPY pairs. The setup might not be exactly the same, but what is visible is what you want to take. That's just it on this trade. I believe I've already explained so many things on breakout block. So the whole aim of this video was actually explaining the correlations between pairs and how it's going to help you in making good decisions. You don't have to run into bad setups. So if you have a setup and it is not really setting, or you don't have a full conviction based on the formation of candlesticks, it is good that you switch into other pairs. Just know your correlating pairs, and when you know your correlating pairs, you can see that it's not every trade you'll be taking. Let's say this setup was not visible, just like the one on which one, just like the counter trading setup was not visible for me. Yeah, I went to another pair and it was quite visible. So the counter trading setup was not visible on the 5 minutes. Excuse me. Just like the counter trading setup was not visible for me on the 5 minutes. Just like the counter trading setup was not visible for me here on the 5 minutes, I actually went to what's that pair, USD and it was quite very visible. And if you want to check other USD pairs, you can actually check. Let's check AUD JPY just for confirmation's sake, that you be sure that yes, these pairs are correlating. Euro JPY, you see that Euro JPY too gave like, it was not a good I don't know if it would have been visible for you to take trade here. Or let's check other pair, AUD JPY. Okay, this AUD JPY. Okay, AUD JPY was actually visible here too, because you can see what happened. This is 5 minutes, guys. Whenever you're using 5 minutes, you also have to be patient. But the truth of the matter is kind of slower. You see, at the time, not everything will be showing you. Imagine you came through AUD JPY as your first choice of pair to trade for that day, and this is what you get. You're not really seeing anything that is interesting. You might just want to leave it all. But the truth of the matter is you have other good setups. You just need to go to the next correlating pairs to see if there's something else you can see in the market. Every other pairs, they are so very good to trade. Just have to know pairs that are correlating. Just like you have the Euro card and GBP card, you have the NZD card too. The NZD card is actually correlating with the Euro card. If you look at this, is like March 27, where price was, where I took this buy. Let's check the Euro card, what we had around March 27. March 27 Euro card. You see? On March 27, okay, this is it here. This is March 25th. Looking at this date here, you see that I already took a buy trade on Euro card March 25th, and NZD card I took a trade on March 27th. Now in Euro card I could not continue this trade here, but it's more like I continued the trend of Euro card on NZD card. This is NZD card. Sorry, just bear with me. NZD card. Now I was able to get a good setup here on NZD card around March. What date was this? Okay, Okay, March 5th. Sorry for that, March 5th. Then let's go to Euro card. Let's see what we have in Euro card around March 5th. See, most times you might not really see a setup for that day, but if you can understand the act of correlating or correlation, you know that there are trades. This is March 5th here, and you can see how the chart looks. It's not really showing anything enticing, but in other correlating pairs, it was showing a very visible setup. This is March 5th here. You can barely take a trade from this level. Let me just mark it up and show you something. You can barely take a trade here. This is from March 5th here. So this is what really happened here. You can barely take any trade from this level, but in another correlating pair, we had a perfect setup that is still going in line of the trend. That is still going in line of the trend. And this is NZD card. March 5th, you have a pure setup. So you just want to look out for the correlating pairs in order to know where to get your good trades from. That's just how the correlation works. Anything you're not seeing clearly here, you go to the other correlation. It's more like you're looking through a twin. Not like you're looking through a twin. Now look at this now. In the 4 hour, we have this place to like us like in a liquidity level here. Then if I should check Euro card. Euro card is not far away. Euro card was above. You see, there's still a liquidity level here too on Euro card, but you see, it's quite different from this from NZD card. So it depends on what you're seeing and how you're seeing it. Just see what you want to see, and if you're not seeing it, you go to another pair that is correlating. Now this one is looking confusing, then you can go to NZD card or AD card, any other correlating pair. Just make sure you see what is tradable for you, something that is not going to make you lose. Then you see AD card is actually still taking out liquidity too. That means the price might likely want to go up. Then you have to identify which one gives you the best chance of winning a trade. That is how you work with correlating pairs.